Imagine putting $10,000 into Palantir Technologies at the very end of the year 2022 and simply holding that investment until today. That original amount would now be worth more than $200,000. This dramatic rise in value shows just how explosive the stock's performance has been, especially with the rising influence of artificial intelligence technology. Many investors have been drawn to Palantir due to its unique capabilities and consistent performance in both government and commercial sectors. This kind of return can make it seem like Palantir's growth is unstoppable and that it will continue climbing for the next 15 years. However, the reality is not as straightforward. While past performance has been exceptional, it does not guarantee similar gains in the future. In fact, it is very unlikely that a small investment in Palantir made today will turn into $1 million by the year 2040. For newer investors who did not benefit from the earlier surge in stock price, the road to transforming a modest investment into a $1 million windfall becomes increasingly difficult as the company matures and its valuation becomes more demanding. Even those who are willing to commit serious money on a monthly basis are facing an uphill battle. For example, if an investor started putting aside $2,000 each month into Palantir shares and continued that for the next 15 years, the returns would still need to be well above what the stock market has historically delivered to hit that $1 million milestone. In other words, unless Palantir experiences another period of massive, sustained growth, the math just does not work in favor of turning smaller or even moderate investments into seven figures within that time frame. So why is that the case? What makes it unlikely that Palantir will repeat its earlier stock price performance? The main reason is that much of the recent growth came as a result of the company launching its artificial intelligence platform. This platform has revolutionized how clients use Palantir's software by enabling natural language interactions. That means users can operate complex data systems just by typing or speaking in plain language. This enhancement made Palantir's tools more approachable, more effective, and more widely usable. Because of that, companies across different sectors began expanding their use of the software. This expanded usage especially benefited Palantir's commercial business within the United States. As businesses found more ways to use the platform, they entered into larger and more valuable contracts with the company. That strong demand was reflected in Palantir's financial performance. In the most recent quarter, commercial revenue in the United States climbed by over 70%. This, combined with solid growth from government clients, pushed total company revenue up by 39% compared to the same quarter last year. These numbers demonstrate how quickly Palantir's business has been growing in response to increased demand for its artificial intelligence solutions. Another element that makes Palantir unique is its minimal focus on traditional marketing and sales strategies. While most technology companies spend heavily to attract customers through advertising and direct sales teams, Palantir takes a different approach. The company believes that continually improving its product will naturally attract clients who recognize the value on their own. As a result, spending on sales and marketing rose by just 22% year over year. This relatively small increase in expenses helped the company grow its operating margin. In the first quarter of this year, Palantir reported an operating margin of 44%, which is a significant improvement compared to 36% during the same period last year. Looking forward, Palantir seems well positioned to continue benefiting from rising interest in artificial intelligence and data-driven decision-making. Under the current United States administration, led by Donald Trump, government spending is expected to increase in key areas such as national defense, immigration control, and border security. These are all sectors where Palantir has already played a role and is likely to remain relevant. The company could also become involved in advanced defense projects, such as a newly developed missile defense program. If those contracts materialize, they could represent major growth opportunities for Palantir. Following the release of its strong first quarter results, the company increased its full-year financial outlook. It raised its revenue forecast by about 4% and boosted its projection for operating income by approximately 10%. This optimistic outlook signals that Palantir's leadership team expects continued momentum throughout the remainder of the year. However, despite all these positive developments, there is still a major issue that investors cannot ignore. That issue is the company's current valuation. At the moment, Palantir's enterprise value is more than 80 times the revenue that company leadership has predicted for 2025. Furthermore, when comparing it to projected earnings before interest, taxes, depreciation, and amortization for the same year, the stock is trading at over 185 times those estimates. These are extremely high multiples. Even if Palantir continues growing at a rapid pace, it would still take years for these figures to normalize and become more in line with other established software companies. This brings us to a difficult truth. While artificial intelligence is still in its early stages and Palantir has performed very well, the stock price may be ahead of what the the underlying business can justify. This was made especially clear after the company released its first quarter earnings. Despite delivering excellent numbers and raising both revenue and profit guidance, the stock price declined. This shows how risky it can be to invest in a stock that is priced so far above its fundamentals. When a company trades at such elevated levels, even great results may not be enough to push the stock higher. Anything short of a major surprise can cause a drop in share price. That puts added pressure on Palantir to continually outperform expectations. A missed earnings forecast, a delay in a government contract, or even a quarter that simply meets predictions could all result in a significant decline in stock value. For investors who are hoping for another multi-year run like the one seen over the last 2.5 years, this presents a real challenge. Until the valuation becomes more reasonable, it may be wise to look elsewhere for investment opportunities that have a better balance of risk and reward. However, this does not mean Palantir should be ignored. The company remains one of the leaders in the artificial intelligence space, and it continues to execute well across both its commercial and government business segments. If the stock becomes more affordable, or if its growth continues to outperform expectations for an extended period, then it could present an attractive buying opportunity. Essentially, if you had invested $10,000 in Palantir Technologies at the end of 2022, your investment would now be worth over $200,000 thanks to the company's explosive growth driven by its artificial intelligence platform and rising demand from both commercial and government clients. However, replicating the success going forward is unlikely, especially for new investors, because the current valuation is extremely high, making it difficult for the stock to deliver similar long-term returns. Even consistent monthly investments would require returns far above historical market averages to reach $1 million by 2040. Despite strong revenue growth, expanding margins, and promising opportunities under the current administration, Palantir's lofty valuation poses a major challenge, and any failure to exceed expectations could lead to price declines. While the company remains a leader in artificial intelligence and may offer future buying opportunities, investors should be cautious and avoid expecting past performance to repeat. With that being said, I will see you in the next video.